Have you ever opened your bank account and thought, I'm being responsible. My money is safe. You see the balance. You see the bank. But here's the question. Is your money actually working for you? Or is it just sitting there? Most people believe that if their money is inside a bank, everything is fine. It feels safe. It feels secure. And on the surface, that makes sense. Your cash is protected. You can access it whenever you need it. But safety is only part of the story. Here's the problem. Your money can look safe and still be losing value. That sounds strange, but it happens every single day. Because if your cash earns almost nothing, while prices keep going up, your buying power is quietly shrinking. You don't get a warning. You just slowly lose value over time. And this is what many people miss. A bank account can protect your money from being stolen, but it doesn't automatically protect your money from inflation. Your balance may stay the same, but the world around that number changes. Groceries cost more. Rent costs more. Travel costs more. And suddenly, the same cash buys less than before. That's why cash sitting in a low-interest account can be a problem. It looks harmless, but that's exactly the issue. Nothing is happening. Your money is asleep. It isn't growing. It isn't working. And it isn't helping you keep up with inflation. For millions of people, that's the hidden cost of a traditional bank account. Quick question. If you're learning something new today, hit the like button and subscribe. It really helps the channel, and it lets me keep making simple finance videos like this. Because the goal here is simple, to help you understand where your money goes, why it matters, and how to make smarter decisions with your cash. Now let's get back to your money. So where can you keep your cash while still giving it an opportunity to grow? That's where Fidelity comes in. More specifically, the Fidelity Cash Management Account. At first glance, it looks like a normal bank account. You get a debit card, you can spend money, you can manage everything online. But unlike many traditional accounts, your cash doesn't just sit there doing nothing. A lot of people have good intentions. They want to save money. They want to be responsible. So they put money in the bank, then they move some of it into savings. And over time, they keep adding more and more. Months go by, sometimes even years, and eventually people start asking an important question. Is my money actually growing, or is it simply sitting there? Most people never stop to think about this. Not all cash accounts are created equal. The moment you start looking a little closer, you begin to notice some important differences. Some accounts simply hold your money. Others are designed to help your cash do more. And once you understand how the system actually works, you start seeing opportunities that most people completely overlook. For context, the average savings account in America pays very little. Many large banks pay even less, which means two people can have the exact same amount of money, but get completely different results. Imagine two people each have $10,000. One keeps it sitting in a traditional bank account. The other puts that cash into a system designed to make idle money more productive. Same money, very different outcome. At a traditional bank, your cash often earns almost nothing. The bank takes your deposits, uses them for its business, and pays you a very small amount in return. Those deposits help fund mortgages, car loans, credit cards, and countless other banking activities. Meanwhile, the bank continues putting your money to work every single day. Fidelity works differently, because even though it's technically a brokerage account, it works almost exactly like a checking account. You still get a debit card. You still get direct deposit. You still get online bill pay. In other words, all the everyday banking features people expect are still there. But unlike many traditional banks, your cash doesn't just sit there doing nothing. The real difference is this. The difference is where your money actually sits. When cash enters your cash management account, it automatically moves into something called SPAXX. Now that name sounds complicated, but the idea is actually very simple. Your cash doesn't just sit there doing nothing. Instead, it starts working automatically in the background. That's really the core idea behind this account. You keep the features people already use every day. Things like a debit card, direct deposit, online banking, and bill payments. But at the same time, your cash can continue working in the background, automatically, without constant monitoring, without moving money around every week. Because technically, it isn't a traditional bank account at all. It's actually a brokerage account. And before you click away, that's a good thing. Because even though it's technically a brokerage account, it works almost exactly like a checking account. You still get a debit card. You still get direct deposit. You still get routing and account numbers. You still get checks. And you still get online bill pay. But here's the important difference. The difference is where your money actually sits. At a traditional bank, your cash often earns almost nothing. Your money just sits there, doing very little for you. Fidelity works differently. When cash enters your cash management account, it automatically moves into SPAXX. Instead of sitting idle, your money immediately starts working. For context, imagine two people each have $10,000. One keeps that money in a traditional bank account. The other keeps the exact same amount inside Fidelity's cash management account. Same money, different outcome, because one person's cash is sitting still, while the other person's cash is working. Now let's talk about the question everyone asks. Is this actually safe? Because the moment people hear the words money market fund, they immediately get nervous. Most people are used to hearing one thing: FDIC insurance. And if something isn't FDIC insured, many people automatically assume it's dangerous. But that's not the full story. Now here's something interesting. Throughout the history of government money market funds, investors have not lost principal in the way many people imagine. And that's one reason these funds have become so popular for cash management. But Fidelity adds another layer of protection. The account is covered by SIPC protection. Coverage can extend up to $500,000, including cash balances within certain limits. Now here's where Fidelity gives you a choice. If FDIC insurance is absolutely required for you, Fidelity offers another option. It's called the FDIC Insured Deposit Sweep Program. With this setup, your cash is spread across participating banks, giving access to very large FDIC insurance coverage. But there is a trade-off. Higher protection often comes with lower yield. Meanwhile, SPAXX has historically offered a higher yield. Fidelity lets you choose. Now, let's talk about one of the most overlooked benefits: taxes. Few people ever think about this part. But depending on where you live, part of the income generated by SPAXX may be exempt from certain state income taxes. Why? Because a portion of the fund is invested in U.S. government securities. The result? Less money going to taxes, and more money staying in your pocket. One feature that really got my attention was this: unlimited ATM fee reimbursements worldwide. Think about that for a second. You're traveling. Maybe you're in the United States. Maybe you're somewhere in Europe, or on the other side of the world in Asia. You need cash. So you walk up to an ATM. The machine charges a fee. Normally, you just accept that cost. But Fidelity reimburses those ATM fees, not just in your hometown, not just in the United States, worldwide. Now let's talk about another travel benefit: foreign transaction fees. Most debit cards charge around 3% every time you make a purchase outside your home country. That may not sound like much, but it adds up surprisingly fast. You buy coffee, you pay for a hotel, you grab lunch, and those extra fees keep stacking up. Fidelity works differently. Its debit card charges 0 foreign transaction fees. 0. Which means more of your money goes toward your trip. Now let's go back to one of my favorite features: automatic earnings. This is something people constantly underestimate. Most people have good intentions. They plan to move money. They plan to invest. But life gets busy. And then nothing happens. The Fidelity Cash Management Account removes that friction. Your paycheck arrives, the money is deposited, and automatically moves into SPAXX. No reminders, no transfers, no extra steps. It just happens in the background. Another thing I really like about this account: there are no monthly maintenance fees. Think about how many bank accounts still charge fees simply for existing. Every month, a little bit of money disappears from your account. But Fidelity's Cash Management Account works differently. There are no monthly maintenance fees, and there's no minimum balance requirement. Whether you have $50 or $50,000, the experience stays exactly the same. Now let's talk about who this account is actually best for, because not every financial product is right for every person. In my opinion, the Fidelity Cash Management Account is a great fit for 3 types of people. First, people who travel regularly. Second, working professionals. And third, savers and investors. For those 3 groups, this account is very hard to ignore. Now, before we finish, I should also tell you who this account is probably not for, because no financial account is perfect. There are 3 groups of people who may want something different. First, active traders. Second, people who rely heavily on traditional local banks. And third, high-risk investors. This account is designed for managing cash efficiently, not for aggressive speculation. There is one more group of people I would probably not recommend this account to: people who absolutely love traditional branch banking. If you enjoy walking into a bank branch, sitting down with a banker, depositing cash regularly, and handling everything face-to-face, this probably isn't your ideal setup. Fidelity is designed primarily as an online-first financial platform. There is one more downside you should understand. The yield you see today may not be the yield you see next year. Right now, SPAXX is paying an attractive yield, but money market yields move with interest rates. If interest rates fall, the yield on SPAXX will likely fall as well. That's simply how money market funds work. So it's important to understand that today's yield is not a permanent promise. So after looking at everything, what is my final verdict? For me, the Fidelity Cash Management Account is one of the best cash management accounts available today. Not because it's perfect, but because it combines a lot of features that are genuinely useful in real life. You get SPAXX, you get competitive cash yields, you get a debit card, you get ATM Fee Reimbursements, you get travel-friendly features, you get no monthly fees, and no minimum balance requirements. For most people, it checks a lot of boxes.